$3,200 a month. Every dollar of it sent through Zelle, no pay stub, no tax form, nothing withheld. That's what one woman's husband has been bringing home from a work-from-home startup job since December. His employer told him none of it's taxable. She wasn't so sure, and it turns out the real answer here is stranger and more expensive than either of them expected. Hey Profiteer, Eric here. Welcome back to Real Money Stories. Today we're digging into a question from the Personal Finance subreddit about a husband getting paid entirely through Zelle, and whether that means the IRS just never finds out. This one comes from a wife doing the responsible thing, checking her spouse's new pay setup before tax season catches them off guard. Let me read it to you in their own words. Husband gets paid through Zelle. Hi all. So my husband has started a new job this tax year. It is a work-from-home startup where his partner pays him through Zelle. His partner said since it's through Zelle, he doesn't have to pay taxes. This doesn't seem normal to me, but I don't know that much about this sort of thing. He makes around $3,200 USD a month. His best month was around $7K, but usually it's around $3,200. Every dollar gets sent to him through Zelle. He started in December of 2025. My question really is, are we going to owe taxes the next tax season? Eat it. Oh my goodness, thank you guys for all the info. Okay. First thing I want to say, good instinct. She heard something that sounded a little off, and instead of just trusting it, she went and asked. That's honestly half the battle with money. I get why partner said this too, whether he actually believes it or he's just hoping she won't check. I've been writing about money for over a decade, and the pattern I keep seeing with cash-based and app-based pay is always the same. People assume that if there's no paperwork, there's no obligation. That's backwards. The IRS doesn't care how the money moved. It cares that it moved. So here's what I'd probably do in their shoes. And there's more going on here than just, yes, you owe taxes. First, let's kill what I'd call the no 1099 note tax myth. The rule is simple. All income is taxable the moment you earn it, whether or not anybody ever sends you a form for it. Full stop. And here's why that partner comment might feel true, even though it's dead wrong. Zelle isn't like Venmo or PayPal. It's a bank-to-bank transfer network, not what the IRS calls a third-party settlement organization, so it's not required to issue those 1,099K forms the way payment apps now do above a certain threshold. No form shows up in the mailbox. It feels invisible, but invisible to an automatic IRS matching system is not the same thing as invisible to the law. My advice, starting today, is to track every single payment in a simple spreadsheet, date and amount, because nobody else is going to hand him that record at tax time. Second, there's the self-employment tax reality, and this is the part that actually surprises most people. On a normal W-2 job, your employer withholds income tax and covers half of your Social Security and Medicare taxes automatically. You never even see it happen. If he's being paid straight through Zelle with nothing withheld, he's almost certainly being treated as an independent contractor, not an employee, which means he owes the full 15.3% self-employment tax himself on top of regular income tax because there's no employer picking up their half. Up to this point, everything here is pretty textbook. Guy gets paid, guy owes tax, end of story. But there's a wrinkle most people miss, and it changes the size of that bill quite a bit. If this partner controls his hours, tells him how to do the work, and he's not really running an independent business of his own, he might legally be an employee who's been misclassified as a contractor. Some employers push exactly this "you don't owe taxes" line because it saves them money on payroll, taxes, and benefits, not because it's true and not because it benefits him. If that sounds like his situation, he can file IRS Form SS-8 to request an official determination, or at the very least, get his actual status in writing from the employer before filing season hits. Third, the calendar matters here, and this is what I'd call the estimated tax safe harbor rule. Our tax system is pay as you go. Without an employer withholding anything, the IRS expects self-employed folks to send in estimated payments every quarter, not just one lump sum in April, or a penalty can apply. Since he only started in December, the 2025 exposure is small, basically 1 month of income. But starting in 2026, that quarterly clock is the whole ballgame. I'd sit down, estimate what December actually owes, and then set up quarterly payments for 2026 through IRS Direct Pay or Form 1040 ES. And fourth, the practical piece, the one that actually protects their bank account day to day, I call it the 25 to 30% set aside rule. The second one of those Zelle payments lands, move a quarter to a third of it into a separate high-yield savings account earmarked only for taxes. Here's why that matters. A W-2 paycheck already has taxes pulled out, so what you see is what you can spend. Self-employment income doesn't work that way. The full amount hits the account looking like it's all yours, and it's easy to spend money the IRS already has a claim on. Physically moving it out removes both the temptation and the surprise next April. None of this replaces sitting down with a CPA or an enrolled agent who can actually look at his numbers, especially with that classification question sitting in the middle of it. Just a friendly reminder that this episode is intended for entertainment and education purposes only and should not be considered financial or legal advice. The specific question here was about one husband, one startup, and $3,200 a month moving through Zelle. But the principle underneath it applies everywhere. The way money arrives in your account, cash, check, Venmo, Zelle, doesn't change whether the government considers it income. If you earned it, it's taxable, and the safe move is always to plan for that instead of hoping silence from a payment app means you're in the clear. If you found this helpful, share it with someone dealing with the same thing. Until next time, stay profitable.